that you should know about and be able to identify in the market: an uptrend, a downtrend, and a consolidation slash ranging. So we're going to go over what uptrends look like. So an uptrend consists of higher highs and higher lows, right? So what are higher highs and higher lows? Well, when the market is going up, it makes a high. And when it retraces or pulls back to the downside, it makes a low. Now, to identify if this is a true uptrend is when the market wants to push right above the previous high, then comes back, pulls back to make another low, and it makes a newer high past the previous high. So with an uptrend, you typically want to look for buying opportunities. And so where do you buy? You buy at the lows and you take profit at the highs. All right. So next we have the downtrend, which consists of the opposite of the uptrend, lower highs and lower lows. So when the market is going downwards, it makes lows in the market, like so. And then when it pulls back or retraces, it makes highs. All right. So we have a lower low and a lower high. The way we identify a downtrend is when we see that price moves and breaks past the previous lower low to make a new lower low, pulls back to make a new lower high as long as it doesn't pass the previous lower high, and it makes a strong move downwards past the previous lower low. So typically in a downtrend, you want to focus on getting selling opportunities. Your selling opportunities are going to be at the lower highs, and your targets are going to be your lower lows. All right. You want to enter the market at a high and exit the market at a low. On an uptrend, you want to enter the market on a low and exit the market on a high. So now we have the third type, which is the consolidation slash ranging. All right. And this is when there are equal highs and lows in a sideways motion. All right. So typically we have our resistance and we have our support, and we have price bouncing between our support and our resistance. Okay. But it's not going to do this forever, right? It needs to kind of like break out of it first. So once you see a break of a consolidation, that confirms the new trend of a downtrend or an uptrend, depending on in which direction it breaks out of. So typically in a consolidation market, if you are a beginner, you want to stay away from trading this consolidation market and wait for a break either below or above a support or resistance. Wait for a pullback, and your entry, depending on in the direction that the market breaks out of, will be either at a high or at a low. So in this case, this broke down and then retested to make a what? Lower high. So we're going to exit at the high, enter at the high, and exit at a low. So now let's see how these three markets actually view in the chart. So here is an example of a downtrend, okay? And I'm going to use arrows to guide you on where these lower highs and lower lows are, all right? So we come down here, and you can see this is the top of the market, comes down, makes a lower low, then comes up, makes a lower high, then makes a lower low. This already confirms that this is a downtrend, right? Then we have the lower high. It doesn't break past the previous lower high, but breaks past the previous lower low. Pulls back, then comes down. All right, just like so. Now we have a huge upside, right? It breaks the previous high. So now, in order to confirm that this is a change in direction, it needs to make a lower low and then a higher high afterwards, right? But it didn't. What it did was it kept going straight down to make a new low down here. So we are still in this downtrend down here, right? And then it just keeps going in a down trending motion, as you can see, all right? So now let's see how this looks like in a consolidating market after it's just been downtrending. Here's an example of a consolidated market. We have our support, we have our resistance, right? I use zones, that's just my preference of trading and marking up my charts. And we have the sideways motion, right? Bounces off support, bounces off resistance, comes back down until finally it breaks up. So now we have entered in an uptrend after this break of this resistance. So now let's see how the uptrend is forming. Now we see that we have made lows and highs here. All right, we made a high up here. If we go in a little bit closer, see, these markets are not going to be as pretty as I've drawn them, but as long as you can see the lows and the highs and identify that the highs are being broken and the lows are not, this confirms that we are still in an uptrend. Okay, and you can see that here we had a little slight consolidation over here, right, until we have a break above to continue to the upside, a retest of the support to continue again to the upside, making more higher highs and higher lows. Okay. And finally, you will learn this in other videos, but now we have a head and shoulders pattern indicating us a downtrend, and then we have lower lows happening and lower highs. So I hope you guys gained some value off this video. For your homework, I want you to pick a pair and identify lower lows and lower highs on a downtrend, higher highs and higher lows on a uptrend, and also identify the equal highs and equal lows of a consolidated market. Hope you guys, again, found some value off this video and it kind of cleared up a lot of questions you may have and being able to identify these. It's your boy Josh again, and welcome to Epic